Good evening, all. Ira Epstein with your metal market wrap-up. And this wrap-up is for Monday. We're at the 26th of September 2022. Start of the Jewish New Year was last night, so traders return tomorrow. A lot of them that took off the day today. I did a special report over the weekend. So if you go to my website, iraepstein.com, just iraepstein.com, no space in between the name, and come up here to market research and click on, you'll see the report dates 9/24/22, and it's indices, stock indices. And I review why I think the market's in the window right now for a bounce. This report only stays up 3 days. I think the window's here. Doesn't mean I'll be right. And you'll find out what I want to do off that bounce. You're going to see weekly charts, daily charts, and the seasonals. I took the seasonals and I carried them into January because I am looking still for that Santa Claus rally at year end. Doesn't mean I'll be right, but if the charts line up with it, I show you what the seasonals are and how it works. So just go to our website under market research, special report. Okay? All right, let's come over together now to here. So we're getting a rally tonight, and we're so overdue for a rally. We walked in, as you know, for the past 2 trading sessions, not including tonight, to the big event out of the UK, the market cratering, taking world markets with it, in addition to a Federal Reserve that's trying to break the back of inflation. Now, if you take a look at commodity prices as a whole, they are not on the upside. You're at $76 in November crude oil. You're under $90 in Brent, just giving you the energy. You're not $8 in nat gas. You're at $7 with a storm coming that maybe it's getting a bid off of. When you look at the metals, you made a 2-year low in the gold market. In the stock market, it's market after market that has taken down its price earnings. It's only the top 10, 15% of stocks that are keeping earnings that are 22, 23, 25 times earnings. Everything else is in the repricing area. And by the dollar being up here at 113.74, which is down 25 points. Remember, it was over 114. We price American goods out of the market. So the supplies we're getting and that we maintain, if they can be bought somewhere else, the same good, and it's not in the US dollar, they get a currency advantage from their currency. It's that simple. To buy the US dollar, you're taking the 0.968 euro to buy a dollar. You're getting hurt. It used to be the other way. The Fed knows this. This is all engineered in part. They certainly had nothing to do with the UK, or did they? Because as the Fed moves, so do other central banks. I think you've seen that. So the question now is, and this will be the big one, S&P Global wrote a report tonight about it that I was reading. And their report was very good. They think that we have already peaked on the headline inflation. I have to agree. We saw the last CPI report. It wasn't at 9. It was in the 8s. It's the core that I don't know that's peaked, and that's where I don't know that they're right or wrong. They do think that you're going to see unemployment numbers start grabbing traction now. That this moves that we're having will take unemployment up in 2023 to about 4.8% from the 3.7 we have, and over 5 in 2024. 2024. I don't know. Going out to 2024 is pretty far. I can live with their projections right now because everything changes, and they have the right to change that as you get new data. But that's what I'm looking at. So if we take a look at gold, come on. When you look at the gold market, you're still down another, and it's only the first day, you're down 1.13%. You're at a 2-year low. The market just keeps breaking down. And other than short covering, there's no reason to own it. You'll say, why? Because you can get 4.2% or 4.3% on a 2-year note. Core inflation is 4.2, 4.3%. You're about even. Got what I'm saying? Why do you need gold? It pays nothing. You're betting it's going to go up. It'll go up, I think, since it didn't this time around when the Fed pauses. or starts its decline. Then gold will come alive. It'll say, the headwind of the strong dollar is now going to be out of the way. The market's going to change gears. It's the only story that seems to make sense for me to think that gold on a lasting bull market will do that. You get your short-term short covering at any time. News of war, events, that can always happen. When we look at the swing line, there is no trend. You have a higher high, lower low. You've stayed underneath this line in the sand, and you have heard me tell you over and over, you need a master filter. For me, it's the 18-day, the 18-week moving average of closes. When the market is under it, I'm looking for sell signals. When the market is over it, I'm looking for buy signals. It's the master filter. So if I get a sell signal over it, I'm not taking it. I wait for the market to get under it, and that's when I'm taking them again. It's a filter. Then I look to see where we're at in Bollinger Bands. Why? Because the market will only stay above or below a Bollinger Band 5% of the time. It can ride the band. You can latch onto it and just keep latched onto it. Fine. My own rule is I won't sell a Bollinger Band. You do whatever you want. I won't do it. I had one person say, hey, Ira, that was really great. You told me not to sell the SPX. Number one, I don't even know you, so I didn't tell you. What I said was I don't believe in selling the lower Bollinger Band or ever under it. And if I do, slap me across the face because I broke my rule. I won't break my rule. Why? Because more times than not, it becomes a sucker play for a bounce. If you buy it over it, you can generally buy it a little cheaper. Can the market latch on from time to time? It can. And when it happens, so what? I walk away. Nobody can catch every trade. If you think you can catch that and you know the one that it's going to latch on, my God, do it. You're that good to criticize, do it. Then when you take a look at the slow stochastic, we're now going into the embedded phase, which tells me that I don't need a trend. If the market decides to embed, and that would take both numbers, you can't count today, but it would take both these numbers from Monday being under 20, Friday under 20, and under 20 the day before. I've got my embedded reading. So what am I looking for? I am now looking for a rally to get short the market. I'm wrong if the red number closes over 21, and I'll look for the market to come down and challenge these lows again if I can get my short sale off, basis my technique. In the gold-silver ratio, as I explained to you the other day, I thought we were going to get more of a correction. The market started taking out a prior high, so maybe it wants to go back and challenge the 89.77, the 18-day average of closes. When you look at silver, the silver market was trying its darn best to stay above the 18-day average and get up again to the Bollinger Band and couldn't do it. It was overbought. It's now already taken itself, and it's so close. If it drops anymore, it'll be oversold. So, will it trade between those two bands? Looks like it. I don't think that it's weak enough to get down to the lower band unless some event in the world takes place. It's already seen a big event out of Europe, and the pound event did not break the market any further, so probably going to just drift here for a little bit. Copper is called Dr. Copper for a reason, because world economies use copper in the building of so much, electricity, copper pipes, I can go on and on. Everything we buy at some point, copper comes into play in either the machinery that makes it or the good itself, whatever. And in copper, it's telling you there's a serious problem. This market's in a classic bear trend, but it's oversold. It's at a Bollinger Band. Let the next guy sell it. Ira's not interested in that. There's a lot of things I'm not doing right now instead of doing. You just broke under this low. I should have removed this other arrow. You stepped out of your trend. Tell me what number the market failed against. It was fighting its battle, and we talked about this a number of times. Let's get to it. Between the 100-day average in green and the Bollinger Band. It began right here, fighting these battles. Now, if you take out this number, which is a big break, admittedly, but if that's taken out what you did, you're actually opening the door for the 799 level. I don't know if it'll get there, but that's what you've done. Now, the fact that the market's this oversold that fast, now I start questioning. Maybe it doesn't want to get down there. I pull back my part. But that's the reason. I'm already so oversold and not embedded. in the palladium. You fell back to the support at the 100-day average, but you're not in an uptrend or a downtrend. You have a higher high and low, and you're oversold. And in the dollar index, I'll let somebody else own it. Do I want to own a market that's over the Bollinger Band? You heard me talk about it at length. It's not embedded. I'll let the next guy own it. Same guy that's telling me about the other side, he can buy it there. I think you can buy it on a better condition when the condition is right. So remember, if you want to get that special stock index report, it is so simple to do. All you need to do is go to our website, iraepstein.com, under market research, the report, you'll see it right there. Give it a click and enjoy it. Only up for 3 days. You have a great day.